The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990. Payment Assistance Program, it is back. Geneva has that one. rsrpaymentassist.com. rsrpaymentassist.com. Got a couple examples in there. One saved a family, or proposed saved a family $303,000 over 15 years. One saved a family $173,000 over 15 years. Go to Ron Siegel Radio on Facebook. Our Facebook page has the details of these different programs. The Home Select program, that one's back also. It's a first position home equity line of credit. Great program. EPR about 1.85% is what it works out to on the last scenario I just did. Dow Jones Industrial Average now up 846. The 10-year treasuries are now down. 10-year treasuries down 3 basis points at 2.86. Mortgage-backed securities are up 6 basis points, so they're pretty flat, not doing a whole heck of a lot of anything. But OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions. And I love contrasting the OBMMI number because they are actually locked loans. And then I can contrast that with Freddie Mac, who gives us their data every Thursday morning at 7 o'clock California time. So Freddie Mac says that the 30-year conforming loan right now is at 5.13%. 5.13%. But again, OBMMI, they have the actual data. Yesterday, 5.505 is where loans locked at yesterday. Again, that's across 35% of all locked loans. Jumbo loans, 5.323. FHA loans, 5.411. USDA loans, for those of you in the rural communities, 5.41. And the best loan on the market, but you got to earn it, it's the 30-year VA loan, 5.411. That's where that locked at yesterday. Why is all of this happening? Well, we're getting data's coming out, and we share a lot of it with you. Existing home sales, measures closings on existing homes, showed that sales were down 5.9% in June at a 4.81 million annualized pace, pretty in line with expectations. Likely measured activity in May and June. You know what was going on in real estate in May and June? Interest rates probably peaked right then. On a year-over-year basis, sales are down 20%, which is leading many, including NAR's Lawrence Yun, to say that we were in a housing recession. The big difference between a housing activity recession, which we're clearly in, and a home price recession, activity has no doubt slowed, but for consumers who is buying a home and may be scared by the media headlines, isn't that a surprise? Home prices are still being supported by low inventory, and there are signs that demand is still strong. Now, let's talk about low inventory here for just a second, because I've got, obviously, if you know Ron Siegel Radio, we've got the charts, and I don't know if you can bring that chart up, Josh. I'm not even sure that I can bring the chart up. I got sounds going in my head.
Sorry.
No problem.
No, I'm sorry.
So, existing homes, here's some stats. 5.9% down month over month to 4.81 million annualized units. Median home prices up 10.8% year over year to 404,000. First-time home buyers, 29% down from 30% last year, 30% last month. Cash buyers are 24% down from 25% last month. Investors, 14% down from 16% last month. But here's the biggie. It's all about inventory. Inventory was up slightly to 1.3 million units, starting to see signs that it might be getting near a top. They tell us there's 3.3 months supply. Normal market is 6 months. There's 747,000 active listings, but 43% of those are under contract. Normally, we have 25% under contract. So if you take those 43% that are under contract off the 747,000, we've got less than 2 months supply of houses available for sale, which would put us at a 14 days on the market. Now, for those of you that don't follow the real estate world, and I know you've got other things to do, 14 days on market, pretty hot number.
It is.
right? I mean, so now the other thing that we're watching for you also, which we watch all the time, is initial jobless claims, measures individuals filing for unemployment benefits for the very first time. 10,000 decreased by 2,000, and with the 10,000 lower revision from the prior week, claims are now at 250,000 people filing unemployment benefits for the very first time. That's a leading indicator of what's going on in the economy. So we watch that for you as well. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990. 800-306-1990.